Micron Technologies has to be one of the most talked about stocks by retail investors. Almost everyone's wondering, should they invest in this stock? Should they skip? And there's a good reason why. At one point, this stock selling above 150. Today is selling at $90. In my opinion, this stock is a great short-term buy, but not a long-term investment. And I'm going to break down both sides of the aisle in this video. This isn't something I do usually. I'm a long-term investor, but I'm going to show you guys the upside for short-term traders and the downside for long-term investors. So before we get started with the analysis, please like and subscribe to this channel. It really helps me a lot. And with that being said, let's start the analysis. The one thing I want you to know about Micron Technologies revenue is that it's cyclical, meaning events cause its revenues to jump, and once those events are fully played out, its revenue plummets again. For example, this first spike right here was the pandemic. Once the pandemic was over, it had a decline. Then we had the ARM transition. This was around the time when Apple came out with their M1 chips. Again, we had a spike right there. Once the whole ARM transition started to die down, you could see its revenue plummeted again. And now we're in the AI hardware boom. And again, there's a need for its memories. As you can see, starting to go up again. Right there. Unlike the last two times, its peak won't be this. No, I think its peak will be a lot higher than this. But once the infrastructure for AI technology is fully played out, it will plummet again. Now, once the analysis is over, I'll talk more about this and weigh the risk of this as a long-term investment. But for now, we know it's at an uptrend. And let's see what will the projected revenue be. So according to a lot of analysis, it's saying an average growth rate of 44%. Some say 35, some say 36, but it is projected to have an exponential growth. So we're going to go off the high top and say 44%. Another thing we need to look at is profit margin. Its profit margin is very low right now. This is going to increase, and I'll tell you exactly why. Their biggest competitor, Samsung, is having issues with NVIDIA chips. And since everyone is using NVIDIA chips to build out their AI infrastructure, this is absolutely destroying Samsung's memory business. So they're charging a higher premium, but they're putting all the capital to use to build out infrastructure to build more of these chips. I expect this profit margin to hit 20 because there really is no other competition. That's why they expected such a massive revenue jump. Everyone else's memories are way behind what Micron has, and their biggest competitor is having issues with NVIDIA. Upcharge customers because they have leverage to do it. Who else are they going to go to? So I'm expecting 20% for profit or margin. Number of outstanding shares. This is disappointing. They keep on increasing the number of outstanding shares at an average of about 2% last 4 quarters. And this trend does not seem to be slowing down. And I believe in the future, they'll increase that 2 to 3%. So I don't see this slowing down, especially the amount of money they're spending. I don't see this number slowing down at all. All right, so let's plug in the numbers and see what will the stock price of Micron will be. So for revenue growth over the next year, I expect it to be 44%. Now the Excel sheet will say 5 years, but we're only doing 1 year, so ignore that printing. For the number of outstanding share, I expect this to increase by 2% over the next year. PE is going to easily demand a 32 PE. I don't see how it's going to sustain a 26. When you're the only supplier of anything, you demand and get a higher PE. So 32, very reasonable and very achievable. Like I said, it's easily going to upcharge customers and it's going to have a 20% of margin of profit from the 13.3 that it has currently. So after we plug in all those numbers, its stock price is expected to be about $202 over the next 12 months. This is extremely speculative. I have to say this. There's nothing that can change the actual investor sentiment to give it that price range. Even if it hits all these metrics, investors still might not want to jump into the stock. But if everything works out for Micron, the way the analysts are saying, we can expect this price to be at $202. Like I said, this isn't an investment. This, in fact, is a trade. And your potential for a 2x return over the next 12 months are pretty solid. They're not the best, and there's no telling if this will actually work out this way, but they're pretty solid. Now we're going to see why this is a bad long-term investment. And let me tell you, it is a shitty long-term investment. Right off the bat, we're going to give this 150% increase in revenue over the next 5 years. 50, which will mean that it will make $62 billion in revenue over the next 5 years. Now, number of outstanding shares. This is going to jump by 15% because they are going to have lots of long-term debt. And if they don't print more shares, they're going to have accumulated so much interest that it might actually file for bankruptcy. So in my personal opinion, that number goes up by 15%. And trust me, that's not that unreasonable. Now the PE. You can't demand a 32 PE. Let me tell you its competitors. Let me show you its competitors. These are all Micron's competitors in the memory chip. Samsung, Intel, SK, Western Digital, Seagate, MediaTek, and Realtek. All of these companies are actual legitimate competitors. And right now, each and every one of them is working their ass off to have as a competitive as a product as Micron, if not better. In my personal opinion, Samsung and Intel will actually beat Micron over the next 5 years, but we won't get into that. So with your competitors up on your heels and your product really has no other way to differentiate itself from its competitors by 2030, what do you think its profit margin is going to be? Well, let's take a look at a competitor to get an idea what that will be like. Now, Seagate is a company that has a mature product line with fierce competition, and its profit margin, it's 11.3%. But we'll give a nice round number for Micron at 12%. When your products become mature and there's no other way to differentiate your product from your competitors, you have to work with thinner margins. You just have to. There's no other way around. So with that being said, we're going to say that its profit margin is going to fall to 12%. How about PE? What's it going to be its PE? Again, let's take a look at Seagate's PE. Seagate has a PE of 23.5, but we'll give Micron a nice whole number. So if you keep the stock for the next 5 years as a long-term investor, you will beat the S&P by 8%. So if you invest risk-free with no worries in the S&P 500, that same $90 in the S&P 500, in the next 5 years, you'll get $133. But with Micron, you get $140. And you have a mountain of risk that you're taking on just to get a measly 8% return. I don't think that's good. For you to double your return from the S&P 500, you need to buy Micron at $70. At this point, it is a risk-free investment for long-term investors. But if you're not hitting that $70, this is a stock that you want to skip as a long-term investor. But as a trade, this thing has high potential to work out. But you need to stay on top of this stock. You need to constantly look at its revenue, its competitors. Look at what Samsung is doing. Look at what Seagate's doing. Look at the memory landscape and see, is Micron falling behind or is it still out-competing its competitors? There's also one indistinguishable fact. Micron Technologies got lucky. There's no other way to say it. Samsung had their issue right around the time when the AI boom happened with the leader of the AI chips, with NVIDIA. So the luck factor has a huge component in Micron's success. If you ask me, I would skip this stock. I'm a long-term investor. I don't like to constantly worry about my investment. Constantly ask myself this question: is this time to sell today? Should I keep it for the next hour? Should I keep it for the next month? Should I keep it for the next year? Not the kind of headache I want to deal with. I'm skipping this 1000%. But if you're someone that likes to do short-term trades or swing trades as they call, this is a good swing trade. It really is. I'm not going to lie to you, but not an investment. That's the part I want to emphasize. Anyways, guys, I want to know what your thoughts are. Do you guys think I'm right? Do you guys think I'm wrong? Or do you think it has a higher upside? Either way, comment below and let me know. And as always, please like, follow. And if you want to support me further, you can always check out my Patreon. I put up a lot more videos there.